In order to become a successful stock market investor, you will need to develop a few key habits. Today, I'm going to share 3 of those with you. How's it going, guys? Ryan here with another investing video, and today we're talking about 3 habits of a successful stock market investor. But before we get into that, please remember to like this video. It helps me out so much with the YouTube algorithm, and leave a comment down below of some of the key habits that you've developed when you've been investing in the stock market that have helped you along the way. And if you haven't done so already, please remember to subscribe to the channel. We talk about the stock market, investing, and financial management style content. And with that, guys, let's get straight into the video. So, habits for a stock market investor. Now, many people develop many different habits, and everyone's habits are, I suppose, unique to them, but there are some key habits that I've found help me when it comes to understanding and being successful in investing in certain companies. Now, let's kick it off with habit number 1, and that is keeping up to date with what is going on. And now this doesn't just limit ourselves to what's going on, I suppose, with the stocks we're invested in specifically, but it's to do with what's going on in general in the market, in the global environment, those sorts of things. Effectively, the more you are aware of what's going on, the better you are going to be at making decisions because you're a lot more informed. So effectively, the first part of this is understanding the company that you're invested in. So this means you need to know exactly what's going on and the timelines of what's going on. And when announcements come out, you need to know exactly what they're about, what they mean, all that sort of information. And in doing so, you'll allow yourself to be able to make better decisions. So for instance, if an announcement was coming out and you're expecting it and it was going to be bad, you're already able to prepare yourself to make a decision on how you want to move forward. If you did not know what was going on with your company and a bad announcement came out and you didn't know how to react, you would end up panicking, and a lot of emotions get involved then and poor decisions start to get made. So understanding the company in general is going to help you straight away in that sense. Now, when it comes to, I suppose, the broader sense, we're talking about the market. So if a downturn occurs in the market or there is a significant global event, knowing what is happening in the world, I suppose, due to the event is going to affect your stock. So let me give you an example. The biggest one at the moment, COVID-19. Everyone knows what's going on with COVID-19 at the moment, but then, for instance, when a vaccine is released, you'll notice the stock market rises, and with that, a lot of other stocks increase in value. If you didn't understand the concept of what was going on with COVID and how it's affecting the global economy, you wouldn't know why your stock is increasing in value, for instance. So especially if you're looking at the biotech type sectors, a lot more confidence is coming into that area purely due to vaccines being released. So if your company was developing a COVID vaccine, for instance, and it was unsuccessful, but you weren't aware it was unsuccessful because you're not keeping up to date with all the information, then your stock plummets, then you're going to panic and you're not going to know what to do. You might end up selling out prematurely because it's not actually a failure, it's just a setback. Or you might end up not doing anything at all and keep losing money because the stock is deteriorating in value and you're just not aware of what's going on. So keeping up to date with your stocks and the market overall is a key habit that I've developed, and it's something that I tend to do every day. So I'll consistently be on Twitter, on forums, on effectively all the ASX announcements and that sort of thing. ComSec is my trading platform that I use, and I make sure I've got notifications on for all the announcements that come out. So moving on to habit number 2, and that is consistently do research. And this comes down to, I suppose, understanding new concepts. So for instance, if you are invested in a company, an announcement comes out, and let's say there has been a development with regards to the feed processing of ore, and you don't understand what that means, do your research about it, because that means any other time that you're invested in a similar sort of company, you're going to be able to make a more informed decision at that time and have a better understanding of the overall process that's going on. So another example would be if you've invested in, once again, a new biotech company. Do your research. What are the requirements for a biotech company to release some sort of pharmaceutical? What are the stages that the company has to go through? What are effectively the gates that need approval before a company can proceed? Understanding the process for that style of company is going to help you a lot in your understanding of where the company's currently at, where they're aiming to be, and the steps in between that. And effectively, you can apply that concept to any sort of company. You could apply that to a software company. You could apply that to a mining exploration company. Every company has stages that they need to get through for all their projects. And understanding what those stages are and how they're going to potentially affect the share price is going to be critical in your decision making and your understanding of where a company is at and how a company operates. And for instance, this is going to help you decide whether to enter into a company or not. For instance, when you're looking at mining companies, typically when they're exploring, there is a large capital cost involved. If they do not have the facilities to raise or fund these capital costs, then maybe that is not a good investment to get into. But if you didn't know that, and you got into a company and they've taken on a large amount of debt, for instance, in order to finance the project, but they can't pay it off, then you've effectively made a mistake because you don't know. You don't have the understanding of, should I get into this stock or not, based on the factors of that specific company or that specific industry. So doing your research and understanding exactly what's going on and when it's going on and how it's going to affect the stock in general is critical. And when you're doing this, effectively what you're doing is developing a library within your head, or even if you write it down, make some basic notes of, this is how this effectively this operation works, and this is what the effect has been. Keeping effectively a journal if you need to, if you don't want to just keep it all up in your brain, in order to understand the process a lot better. Now, moving on to the third and final habit that I'm discussing today, and that is consistent capital injection. And this isn't to do with the fact that you should be, I suppose, injecting capital for, I suppose, large volumes. It's just consistent. So this means every time you get paid, for instance, if you're working a full-time job, you want to allocate a certain percentage of that pay into your investment account. In doing this, that means you constantly have your cash growing month by month, and you can put this where you believe you can make more money. What this is doing is effectively speeding up your process for success in a company. It's setting you up for success because, well, if we put it in this example, if you invest $1,000 in a company and it sits there and does nothing for 6 months, then it goes up 100%. Well, then you've effectively made $6,000. Fantastic, that is awesome. But let's say you consistently injected into your account $1,000 every day and you kept putting it in that same stock. When that stock then does eventually go up 100%, you've had $6,000 sitting there, the stock price hasn't really moved, then it's doubled, and you've made $12,000 as opposed to $2,000. So that's, I suppose, the concept you want to really get your head around when it comes to injecting capital consistently. It's to do with speeding up your success profile. Also, what it enables you to do is diversify your portfolio a bit more. You've got more money in there to consistently invest, and as a result, you have more opportunity to invest in multiple companies. Keeping that cash on hand as well can be helpful when you are looking for new opportunities, and you have that opportunity to then jump on it immediately. If you're not constantly injecting the capital into your account, then you don't have that. The end goal is to obviously then have your investments pay for themselves and not need to inject the capital. But when you're starting up and when you're trying to grow an account, you need to be consistently injecting that capital in order to speed that process up. And with that, guys, I'd like to finish off today's video. I hope you did enjoy it, and I hope you got some value out of learning these 3 habits that I do use. Let me know in the comments below what your thoughts are and what are some of the habits that you've adopted over time. Remember to like the video and subscribe if you haven't done already. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.